So what's the difference between taking wages and taking dividends as payment?
And this is something we explain to people constantly, whether they're brand new, whether they've been in business for 10 years. A lot of people just don't know. And maybe they just haven't like adequately been explained what it means or what the differences are, or they don't care. But it's good to have a general understanding, because ultimately there's two ways as an owner to get money out of your corporation into your own pocket. And you can pay yourself a dividend, you can pay yourself a wage. Those are ultimately the two ways you're getting it out. There's pros and cons to each. Dividends, ultimately dividends are just, you're just extracting cash from the company.
Okay.
And you're just taking it out as you please. You don't really need to do anything. There's different ways you can structure it, obvious, but more often than not, you're seeing someone just month to month, week to week, just pulling cash out of the company. And at the end of the year, you kind of tally that up, and there's your dividend. It's showing up on a T5. Without it, there's tax planning opportunities in between, but it's simple, straightforward, and really easy. But there's also I guess cons to it. A dividend is not a write-off to the company, so the company doesn't see any tax savings, because on the opposite side, a wage is a write-off to the company. So because it's not a write-off to the company, you get taxed a little more favorably in your own hands personally. So you get this T5, you use that when filing your personal taxes, and you will owe a chunk of tax depending wherever you fall in the tax system. So you're not paying into CPP. Nobody's withholding income tax for you like a T4, like a regular employee.
Okay.
You're just taxed on the gross amount at the end. And sometimes it's important. Everyone has a different view on what CPP is going to look like when they retire, but I've seen circumstances of people coming to us as a new client. They've been in business for forever, and they're heading into retirement. And they're like, well, I'm not going to get CPP. What do I do? It's like, you've been paying yourself dividends the entire last 30 years, and nobody ever explained this to you. You haven't contributed to CPP.
Can you still contribute to CPP with dividends, or do you need to kind of just do your own pension planning at that point then?
You need to take extra precautions, I guess. Like ultimately, you don't want to just rely on CPP as your retirement income, right? But you want to focus more on alternate methods, RSPs, other things like other forms of investment. There's still, Service Canada has different options to go out of your way to like contribute yourself to still contribute to it, but it's not quite as simple and straightforward as just having it come right off your wage. Another thing that's usually unknown to people, or we commonly see it as a shock, is dividend income personally isn't considered earned income, and I'm putting air quotes around that, but the tax system says it's not earned income, whereas a wage is earned income.
Okay.
And the key to that is earned income is what increases your RSP contribution limit. So if you only draw a dividend your whole life, you start a company right out of high school, you only draw a dividend, you can't put anything into your RSPs.
Oh.
You don't have any RSP room because you have never had earned income. So there's these other qualitative factors that more than just the taxes you're paying. On the flip side, a wage, there's more involved. You have to withhold, especially from your employees. From yourself, it can be handled a little different if you're the owner. But realistically, you're withholding income tax and CPP if you're the owner, not EI, because you're likely going to be EI exempt. But you're remitting this every single month. And so you've got another task. There's deadlines for payroll to keep in mind to dodge interest and penalties from CRA. Then you're getting a T4 from your own company. So the wage that you're paying yourself, in a very like simplistic scenario, it's a write-off to the company. You've just brought your company's net income down. You save the tax in the company, and you file your personal tax return with your T4, and you've already withheld your own income tax and CPP, and you're contributing to CPP. You're increasing your RSP contribution limit. Most cases, there's always variables in every scenario. Like everything's different, but in a very cut and dry scenario, the overall tax between yourself and the corporation combined,
Yeah.
whether you choose dividends or wage, is usually really close.
Okay.
If there was a clear cut winner, everyone would do it.
Yeah.
So sometimes it's more understanding what each means and what fits your lifestyle and your goals going forward.